Hi everyone, Shuzafat Bless here from Tradable Online Services, and today I'll be taking you on what reversal patterns are in Forex. So starting off with our risk warning, take a good look at this, ensure you fully understand it before we proceed. So what is a reversal pattern in Forex? A reversal candlestick pattern gives a signal that the short-term direction of the Forex market is changing, right? And we also have continuation patterns as well. So just as we have reversal patterns, there are also continuation patterns. But today we'll be focusing on reversal patterns. Okay. So here are some examples. I'm sure you've heard about the wedge, the M and the W pattern. Head and shoulders. Also have the inverse head and shoulders. We have the double top, and then also have the double bottom. So we'll just pick out a few of them to discuss about today. Of course, there are a lot more of reversal patterns, alright, that we will not discuss in this video. So do well to do your own research, alright, ensure you check out things and understand them as well. But here are the most used, the most noticed on the charts, and so you have a basic of that, right? So starting off with the wedge pattern. Okay, here is what it looks like. Okay, you have it's a form of triangle. You have okay, so we have the rising wedge, all right. So you have the triangle, okay, like this, right, like this. Then you have the chart in between coming to this, then, and then usually at the end of the triangle, you have a breakout, either in an upward direction or a downward direction. This part of my drawing, okay. So that's exactly what we have in this case. We have a downward breakout in this place. And how do you set your TP and SL? Now just stop loss and take profit. You can see that here. We just simply measure the distance here, okay, and have it, as our take profit here. Okay, so your entry can be on the second reversal candle, or some people like to wait for a retest, but that really is not ideal in this case, right? So that's it for that. So we have the rising wedge and the falling wedge. The falling wedge is directly the opposite. You have a kind of a triangle, but with the chart in a bearish momentum, forming lower highs. Okay, so that the highs are low and then lower lows. So this is lower than this, so this is a lower low. And in the same case, all right, here we have higher highs. So this high, right, is lower than this high, which is lower than this high, which is lower than this, lower than this, and so forth. So you can see the upward momentum here, you can see the downward momentum here, right? And that's how we have the rising wedge, the triangle where the chart is actually moving up, then actually breaks down, then the downward one, which is the falling wedge. So that's exactly the best way I could describe this, all right? And it's mostly noticed in the opening of sessions, for example, or also retracements, because you know that the market moves in a zigzag pattern, right? So in a retracement, you could have this, this retracement could have something like this, then we have the breakouts come out of it. So also there are key points to look at when expecting these patterns. Okay, so we have the head and shoulders and inverse head and shoulders. So this is an example of the head and shoulder. For example, you have the first shoulder, okay, second shoulder, and then this is the neckline, right? This is the neckline. So we usually take the distance from the head, right, to the neckline. Sorry for my drawing, pardon my drawing really. And then we measure that same distance on the chart in terms of your pips, maybe that's 90 pips or 70 pips. Then you actually use that to set our take profit here, okay? And then you have your stop loss right behind the neckline, or some people like to put it there extra safe, right? But the distance may can be large at times, so you could have your stop loss behind the neckline or the shoulders. But this is not in this video we're not explaining the way to trade it. We are just helping you, all right, showing you each and every one of these patterns so you get to know them, all right, to an advanced level. Later we'll work on the content, all right, that will show you how to trade each and every one of these reversal patterns, right? But they are best used in conjunction with other confirmations. All right, so you do not just say I have a head and shoulder, then I'm going to get in. No, we have a confluence of other confirmation that we want to see to ensure that after making decision of taking a sell, we are correctly expecting to have a return on that. All right, so that's super important. So this is the head and shoulders, the inverse head and shoulders. I'm going to draw it for you, and you can see the head and shoulders already is is it like this kind of upward pattern. You can see that. Then it drops all of a sudden. You have the same thing again, then it breaks off. Can you see that? And in this case, this is our neckline. Can you see that? Exactly what we have there. Now the opposite, right, is the same, but in the opposite direction. So we have the downward trend, right? Then there is a long one, comes back a very large impulse. Then there's a large retracement again, then a very small impulse. And this is your neckline in this case. Right, then you'll be expecting a breakout, in this direction, where here we have in downward direction. So this is the inverse head and shoulders, right? So this is inverse head and shoulder. This is your shoulder 1, shoulder 2, and this is your head. Okay, as you have it in this case. So just like we said earlier, I'm drawing so you'll be able to follow up each and every step, right, of how we actually it's done. So let me clean this up, sorry. Let me clean this up also. Alright. So you have the distance, like we said, the distance from the head to the neckline. So we're basically going to measure this distance here. Okay. Once again, pardon my drawing please. And then we're going to replicate it here. Okay. So this is what we have as our TP target. Okay, and we have the stop loss, our SL somewhere around here. Okay, and then we expect a very nice breakout. Oh, sorry, that's not so good. Okay, now up. Okay. So we have a nice uptrend expectancy here. That will have a very nice uptrend, and then capture that move, right? So that's exactly what we have in head and shoulders, and this is the inverse, right? So just drew that so you see how it's actually constructed. First, you have a downtrend coming up, right? Then there's a very large impulse all of a sudden, and a large retracement back to the the head. The lower high, previous lower high, right? These are lower highs. We're going to talk about that later. Okay, back to this level, I would say, just so everyone can follow. Then the price dodges in again in another bearish momentum, but this time the impulse is not as much as the previous one, so it's just very short here, and then it retraces back to that same neckline again. Then you should know that it's preparing to break off it and then have that work out. So you know how to set your take profit and stop loss, or how you can be profitable off it, I would say, right? Like I said, next time we're going to publish more resources that will show you how to probably make use of this. So we have the double top, right? And that's we have the first stop here, right, and the second right here. So there's usually a neckline in between. You see the neckline here, right? And we expect a breakout from that neckline, just like we had the head and shoulders and the inverse head and shoulders. All right, so this is for the double top. So you have the first top, right, and the second top. All right, then there is a correction, all right, back to the neckline where it's previously tested. At that point, you can anticipate that there's going to be a breakout because that has formed the market pattern you're looking for. And then you could have your distance measured. Okay, so we have the distance here from the neckline once again to the top. All right, and we'll just replicate that here, which you have there, okay, as your TP region. So that's super important. Remember, it all started from an uptrend. All right, we have the uptrend coming up, then a large impulsive retracement, and impulse again back to the previous top, and it just forms an M pattern. See that it's like an M pattern. Okay, so that's exactly that. So let's look for let's see how the double bottom is going to look like. So in this case we had an uptrend, so in that case you will have a downtrend forming in front of you. Okay, pardon my drawing once again. Okay, so you have this happening, there's a retracement. Okay, then there is another impulse again, but this time it does not break, or it does not really, it might break off it but might not be too far off. All right, so the next impulse might actually bypass that one a bit, and something like this. Let me take that drawing again. Sorry, it's not so excellent. Okay, draw it again. So we have a downtrend. Oops, sorry. Okay. So you might pass it a bit. Okay, and you have something like this. Exactly, this is awesome. All right, you have something like this. So once you have this, this is your first stop. All right, exactly how we have it here, and this is your second stop, exactly as we have it here. All right, clean this up so it doesn't confuse us in this video. Okay, so you have your first stop, your second stop. This is the first stop, this is the second stop, and this is the neckline. Okay, this is the neckline, and exactly what we have here. So can you see how it transforms? Then after confirming this 1, 2, 3, all right, and a retracement back to the neckline, or maybe on the way to the retracement back to the neckline, you could then understand, okay, that's why we have a double bottom forming, all right, as a pattern here, or it may already formed when you get to the market. So what you can simply do to set your TP and SL region, all right, in this case, or know how you can profit from it, is simply by measuring the distance from this, that's the top, to the neckline, and replicating this. All right, replicating this here, so you have the same distance also replicated. Sorry about this, and there, so you have that replicated there. So this is how we actually profit from a double top and a double bottom. This is how we actually trade it. But like I said earlier, I would not just trade these things. You see a double top or a double bottom and get in. No, you constantly have consistent losses if you work with that. We trade them in confluence with other confirmations, which we will discuss later in another content. So please do all to keep tuned to the channel, ensure you fully follow. All right, and please take that as a keynote. Do not go to the market and try and trade these things off. But it's very, very vital that you know how to identify these patterns, all right, so that when they form, you will know what else to do in conjunctions with them. All right, but at this stage now, we're still learning how to identify the patterns and ensuring that we know what it means, what we expect, at least we know what to expect, all right, to make use of those patterns. And like I explained here, what we expect is the distance from the top to the neckline replicated as in your formed chart. So we still have the chart left to form the uptrend here. So I simply replicate this distance from neckline, all right, to my TP, and that's my entry. But we do that in confluence with other confirmations that we will teach later. So you can just train yourself to identify these patterns, right, which is super vital. Okay, so here are some chart examples for you to see each and every one of these patterns on the real chart. So this is the head and shoulders. Like I said, never going to be perfect on the charts. At times you get them to be really perfect, but you could see here, this is the head. See, it was an uptrend. We have clearly had an uptrend. Then you have the head here, the first shoulder, the second shoulder. Can you see that? So that's a head and shoulder. Okay, so that's exactly what we have there. And this is the neckline. Can you see that? Can you see that? This is the neckline. Sorry, this region is neckline, right? So let me clean the first one, so we just have a line, so that doesn't get too confusing. Okay, so you can see how it broke off this, and then we have the same distance here. That's the same distance from here, okay, to the neckline, replicated here. Can you see that? Can you see that? sorry, pardon my drawing once again. Can you see that? So we have the same distance replicated from the head to the neckline, all right, as our TP region that we could use to make profit of that. So that's super important. So this is for the head and shoulders. The inverse does the same, okay, but just for the purpose of this video. All right, so you have the double bottom here. As we know, we did the head and shoulders, so we're going to do the double bottom instead for the double top and double bottom. So you have the double bottom here. You can see the price downtrend, all right, impulsive move, a retracement. This is neckline, as in this case. Can you see that? So once it was broken, all right, there was a minus retracement here. You can see the long wick to indicate the buying pressure that was at that point, and it sprouted up all the way. So if you calculate if you check the distance, all right, within this and the head, exactly what we have here. We won't have more than that distance. Can you see that? But we will have the same distance, this distance here, without issues. Can you see that? So that's exactly what I was discussing with you earlier. Okay, so we have the rising wedge in this case, like I said, like a triangle, and in this case we have the higher lows, right? So this low is higher than the previous low, higher than the previous low, higher than the previous low, and then can you see the highs are coming down, then it's forming a triangle. So at this case, what do? We take the distance from these points to this point, and then we measure it according to the break. So if you have a bearish breakout, and you measure that distance there, and that's how we profit from that. I use this example so that you exactly see how it actually happens on the chart. All right, so you could have a bearish breakout here or a bullish breakout. Either of the cases, you have your distance here. You just measure it with your pips using your crosshair on your MT4, MT5, and then that's how you have that. So this is the falling wedge. All right, we have lower lows and higher lows. Okay, you can see that there was a breakout. You measure the distance, exactly awesome. Tip you and you're out of the market. All right, so pause this video, take a good look at these patterns that we've explained earlier, all right, and try to identify at least two of each of these reversal patterns on your MT4 and MT5. If you can't do each and every one of them, no problem, just choose two of them and then try to identify two of each on your MT4 and MT5. Okay, so leaving here with a quote: "I love to challenge myself to greater heights," said Laila Gifty Akita. All right, challenging yourself up to new heights, meaning, all right, attaining new knowledge and ensuring that you fully understand and make use of it to your profitability. This is super important, guys. Challenge yourself to new heights. All right, don't settle where you are. All right, you have a new set of information today that would help you. Some people actually have passed this stage, but just that they didn't properly understand it, or they didn't properly put it to use. It keeps affecting them at this particular stage in their training journey. So please do well. It's never too late. We're never too knowledgeable to fall back to the basics. So do well to fall back to the basics. Challenge yourself to fully understand this time. All right, challenge yourself to properly understand this time, and let that help you. Let that be the breakthrough you had at this particular stage of your training journey that led all right into greater heights in your trading. So thank you very much for following us in this video. We hope to have enlightened you on various reversal patterns. There are a lot more of other patterns that we did not discuss here. But please do well to do your personal research. Check for more of these reversal patterns as you proceed in your trading. So thank you very much for following us. Have a nice day. Thank you.